Is Amazon stock a buy heading into 2026? In this webinar replay, you'll see exactly how we researched Amazon stock from scratch. You'll see us break down the company's business model, moat, growth potential, key metrics, risks, and valuation, all in real time. Stick around to the end for a full audience Q&A and our final take on whether Amazon deserves a spot in your portfolio. Okay, so how are we going to research this stock from scratch? We are going to use the stock simplifier format. So here is the cheat sheet that we are going to use. There's essentially 7 steps to researching a stock from scratch. Now we're going to go fairly quickly through this, and we're going to use the AI prompts that we built to do it. Just know if you have questions about any of the details that we have, if you do buy stock simplifier, it comes with a full course explaining everything. It comes with a tool we're going to use. It comes with the prompts we're going to use. So all of this is built into stock simplifier. But Brian, question number 1 in stock simplifier is this. What is this?
Yeah, so this is the business growth cycle. I think it's probably the one thing that we've kind of proselytized that really kind of changes the way that people understand the stocks that they're looking at. It's the business growth cycle.
Yep. So the business growth cycle, there are 6 distinct stages that publicly traded companies, or really all companies, go through in their life. And figuring out which stage a company is in is critical to doing the analysis on it. So we have a prompt that we're going to run to get this done. But let's go ahead and just ask people right now, which phase do they think Amazon is in? So before we run the prompt, let's do a poll of the audience. Which of these 6 phases do you think Amazon is in if you know Amazon's business right now? So is it phase 1, phase 2, phase 3, phase 4, phase 5, or phase 6?
Yep. And we've got the answers rolling in here. We've already, Brian, in 13 seconds, we had half of our hundreds and hundreds of
Great.
participants already respond, which is awesome. I'm going to give it just 10 more seconds here. I will say Amazon's a little bit of a tough one because it's got so many different parts of its business, and some parts are in this phase, some parts are in that phase. But that was 30 seconds. 3/4 of the people that are watching responded, and 54% said it was in the operating leverage, stage 4. 38% said stage 5. So the bulk of ours either said stage 4 or stage 5.
Okay, great. So people are saying stage 4 or stage 5. So how do we figure out the stages? Well, we have to pay attention to revenue growth, operating profit, and the capital return program. Now, each of those numbers do correlate with a specific metric on the income statement. So we can use the income statement to figure that out. So I'm in stock simplifier here, and here's the all course materials. And I'm actually going to open up a fresh copy of the spreadsheet here that we use just to show you how you can use the tool here to figure out this fundamental question to the business. So if we go over to phase analysis, I'm going to type in this ticker symbol here, Amazon. It's a $2.4 billion company. And let me zoom in a little bit just so people can see a little easier. So you can select the revenue growth targets here and the operating target. And this will actually is a little tool that we can use to figure this out. But I'm actually going to use one of the AI prompts to do this. So here's our database of AI prompts. We're going to do the phase analysis, and we're going to see if ChatGPT, what kind of job ChatGPT does here.
So Brian, I know we're going to get questions on this, so I'm just going to go ahead and ask it right off the bat. Is that the only LLM, large language model, that we can use?
You can use, we've designed them to use all of them. I've found that you get pretty consistent results with ChatGPT. I tried it with Gemini. Gemini gave pretty good results. It was a little slower, and it didn't have links to there. But we're going to use ChatGPT since this is the most popular LLM out there for this analysis. But we designed this prompt. It's a prompt, so you can use it with any LLM. So all I did is I copied this prompt here. It's almost 2,000 words long. And I'm going to paste it in there. And if ChatGPT is doing its job correctly, it's going to say, great, what company would you like me to analyze? And I'll zoom in here a little bit. And I'm going to say Amazon, AMZN. And this might take a couple of seconds for it to figure it out. We have programmed this prompt to use the company's annual report so that's going to be the 2024 annual report and the most recent quarterly report to figure this out. So ChatGPT says phase 4, operating leverage.
It agrees with us.
It has a high confidence in that. So with any AI, you should say, prove it. Where did you come up with that information from? We don't like hallucination. So it says operating income was positive $68.6 billion, up from 36 the year before. And there's a link right
Oh,
here
look at
to
that.
the SEC filing. So if I click that, this should have the 10K from the year ending 2024. And I'm just going to do a quick search to see if it comes up with that. 68.5.
Bye.
Look at that.
Hey, you got it right.
Operating
Way to
income, 68
go.
and 36. So ChatGPT, how can we trust this number? Because the source is right there, the
Hey,
primary
Brian,
source.
I want to point out one other thing real quick. I love how it picked this because revenue growth is 11%, and I can't do the math of going from 37 billion to 69 billion, but I know that's way faster than 11%, and that is the key sign for stage 4.
Absolutely. And there's no meaningful dividend or large buyback. So the company isn't returning capital to shareholders, at least meaningfully.
Well,
So
yeah, I like that meaningful too, because it kind of says, if there was a little bit, that wouldn't really matter that much. So I like that.
Yep. So let's tuck this in our back pocket for later. So in phase 4, the most useful valuation metrics are forward price to earnings and forward price to free cash flow. Why? Because the company demonstrates scalable profitability,
Yeah.
and forward earnings reflect the trajectory of profitability. And we should avoid price to sales, price to gross profit, price to book, liquidation, and asset based valuation. And there are some links. So I would say we've done a pretty good job
Yeah,
on there. And I would agree with that
I
analysis.
would agree with it too. I think in the end, that's the point too. Like you can test this out on companies, you and I have owned this stock for decades. So
Yep.
I agree.
So I'm going to go ahead and just click this phase 4 button here. And what that'll do in our spreadsheet is it'll actually update these to be based on what analysis we should do for a phase 4 for company. So that's how that works there. All right. Question 1 out of the way. Question 2, what does this company do? I bet people have an idea of what it does, but I bet they don't know the details of what that it does. So we're trying to figure out, after we read through the 10K, is this red, I'm confused, yellow, I understand, or green, I'm excited? Now, there are 7 key questions that we ask with any business. How does it make money? What are its key products and services? So 4 are just, what does it do? And 3 are qualitative in nature. So this is where AI can once again help us. Here is the business analysis prompt. I'm going to copy this prompt. I'm going to go over to ChatGPT. I'm going to paste it in.
And while you do that, I just want to answer Omar's question. Said, can I use Copilot? Yes, you can absolutely give it a try.
I've never used Copilot. I don't have access to Copilot, so I'd love to know if these prompts work on Copilot. We've tried all the major ones, but I haven't tried Copilot, which I believe is powered by ChatGPT.
I'm
I
not
think.
sure.
It's a Microsoft
I
product.
assume since they have the partnership between Microsoft and OpenAI.
Yeah. Okay. So here we got using Amazon's most recent annual report, very key information, and the Q1 of 2025 10Q. What does it do? Amazon operates a global technology and retail platform. It runs on large online marketplaces, a cloud division, AWS, a portfolio of digital services, Prime Video, Alexa, and advertising. The company also designs and sells consumer electronics like Kindle, Echo, and Fire TV. Pretty good.
I haven't thought of Fire TV in a long time.
Yep. Pretty good. I would say that that's spot on. And I'll zoom in a little bit more.
I tell you what, this next part, the how it makes money, the bullet points, I think that is the most valuable.
Totally. So how does it make money? Amazon earns revenue from retail sales, third-party services, cloud computing, advertising, and subscriptions. So online stores were 229 billion, 36% through Amazon-owned websites. Third-party sellers was 160 billion. Fees and fulfillment revenue from independent merchants. Amazon Web Services was 106 billion, 17% of revenue. Advertising is 9% of revenue,
Growing fast.
57 billion.
Yep.
Of Amazon's revenue is high margin advertising. Subscription services was 48 billion, and other is 38 billion, or 5%. And this is from the company's 10K item 7 segmented results.
Hey.
Who are the customers? Consumers, third-party sellers, enterprises, startups and governments, and advertisers. Spot on. Where does it operate? North America is 68% of sales, international is 17%, and AWS is 15% of sales, and I think that equals 100.
Yeah, well, and the other thing to point out though too is that the international is likely higher because a portion of that AWS, what they mean by international there is like international e-commerce.
Sure. Yep, that's a good color. Okay, so that's the what it does. Now comes times for the more qualitative. Is this a good business? So
Hmm.
how often do customers buy? Highly recurring activity. Retail customers purchase multiple times per month, especially Prime members. That's
Hmm.
true in my household.
Yeah,
I
every
bought
day.
something from Amazon this morning.
Yep, same.
Amazon clients operate under long-term usage contracts that automatically renew. Prime subscriptions renew annually or monthly, and this recurring usage drives consistent cash flow. Totally agree with that analysis.
Yep,
Can it raise prices? Yes, selectively. Amazon raised Prime membership fees in 2022.
they didn't
Great.
lose me.
Amazon Web Services introduced new higher margin services that offset pricing pressure, and gross margin has risen to 47%, up from 43 the year before, showing pricing and mix improvements. Excellent
I
sign of pricing power.
If you ever get a chance, you should pull up Amazon's gross margins over the last 20 years.
We
It's
can do that.
one of the most remarkable things I've ever seen.
Final question is what happens in a recession? So retail discretionary slows, but essential subscription stabilizes revenue. AWS usage may moderate, but remains mission critical. And advertising is sensitive. So advertising,
Yeah,
I would say, is the most sensitive to
absolutely.
revenue. So operating income declined by 50% in 2022, but then it rebounded. And there are all of the primary sources that
With
have been
links.
used. So you just brought up a good point. So I am going to actually go here and let's click over to Fiscal AI
Hmm.
and I am going to search up Amazon. So here's Amazon on Fiscal AI. And you
Yep.
said, let's take a look at this company's long term gross margin. So
Yeah.
financials and gross profit margin is right here.
Look at that.
Their gross margin used to be 22%. Now it's 49.6%.
I've never seen something like that happen over 15 years.
That is unbelievable.
It's
You thought
unbelievable.
this was going to be a low margin business forever, and Amazon. So let's make sure we're on the same page. This means for every dollar in sales, how many pennies become gross profit? So it used to be 22 pennies. Now it's almost 50 pennies. Incredible improvements. Incredible. Now, one other cool thing we can do on with Fiscal is if we go to segments and KPIs, let's pull up each of their individual components here, and we can actually see how fast each of the individual components are growing. So all I'm going to do is I'm going to click over, and I'm going to put each of these components on.
If you're
So
wondering what the physical stores are, those are mostly their Whole Foods.
so there's the physical components, but if I push this button right here, this will actually stack them up. And so here we can
I love
see
that view.
how, let's just do a 5-year view. I'm going to scroll this to be 5 years, make it a little bit more obvious. Okay, so here's how each segment has grown. So this is online stores, and you can see that CAGR. So this business is growing 6% per year.
So that's probably like a stage 5 business.
Totally. That's Walmart,
Yep.
right? This one is third-party revenue. So this
That's
is from fees from third-party sellers, 17% compound annual growth.
mm-hmm. Much
Next,
faster.
Amazon Web Services, 23% growth.
Mm-hmm.
Advertising, 29% growth. Subscription revenue, so Prime and stuff, 15% growth. And physical stores, 7% growth. So it's cool that with this, you can actually break down and see each of the components individually.
I
So
agree.
cool. All right. So going through this, we know how it makes money. We know its key products. We know that it's a recurring business. We know that the company can probably increase prices. And in a recession, I would say normal,
Yeah,
maybe
I mean,
some recession proofness to it.
some recession proof, some that advertising is highly sensitive, but it is a smaller piece of the pie.
Yep. So let's do a poll here. What do you guys think of Amazon, the business? Is this an attractive business? Red, not at all. Or no. Yellow, kind of. Green, yes, it's a very attractive business.
Yeah. Um, And while we're doing this, just want to remind everyone we will be sending out an email with a link to a replay of this in the next 24 hours. So
Yeah,
you
actually,
will be
while that's happening, if you're watching, if you want Stock Simplifier, if you want the everything that we're using to analyze this, the AI prompts, the cheat sheet, the checklist, all that kind of stuff, Stock Simplifier is normally $199, but Stoffel will share a link in the chat that you guys can get it for $99. So if you could share that in the chat,
just
that would
just
be
shared it. So it's
that would
in the
be
chat
that'd be great.
right
So
now.
what is the answer? Do people think this is an attractive business?
Yes, 91% of people said that this is an attractive business. So
I totally
it's
agree with
yep.
that analysis. All right, up next, moat. Does Amazon have a moat? So, three categories of moat, broadly speaking: none, or it's getting worse; narrow, and it's stable; or wide, and it's expanding. And there's, of course, shades of gray in between each of those, but there are, largely speaking, 5 different sources of a moat. There's 3 different directions of the moat. Excuse me, the current state of the moat is either
Mhm.
none, narrow, or wide. And then I would say, perhaps most importantly,
Yeah, I think
direction.
for investing, it's most important, right?
Direction.
Because the moves in the stock honestly have
Yeah.
more to do with the direction than anything else.
I have no interest in a wide moat that's shrinking. I
Yeah.
am interested in no moat that's widening or narrow moat
Yes.
that's widening. Yeah.
Yes.
So let's, before we do the AI prompt, would love to know what people think. What is Amazon's primary moat?
And
Number one moat source, most important moat. What would you say? Which of the 5 moats do you think is the most powerful moat that
and
Amazon has?
Brian, I would say that of all the publicly traded companies that we could do this on, this to me is the most difficult one.
Sure.
Um, I know what my opinion on this is, and I'll give it as soon as we close the polls. Let's give it like another 30 seconds. But I think that a very good argument could be made for all 5 of these.
I totally agree. I totally agree. Um, if you, again, we're asking for the primary, and I don't think there's a wrong answer. I don't think there's a wrong answer
No.
here, but I can tell you how I would answer it. So, and I would love to hear how you answer it. All right. So what does the audience say?
Yep. So here's what the audience says. 52% said network effect.
Okay.
And then in the teens, we have switching costs and low cost production.
Okay.
So what I would say is I think they're all there. I think the strongest moat, personally, I believe is low cost production. And here's why. I think the hardest thing for anyone to match that would just be almost impossible to match quickly is Amazon's ability to have a package delivered to your front door tomorrow at a lower internal cost. I don't think anyone can deliver that package to your front door tomorrow at a lower internal cost than Amazon. And that's because of their fulfillment network. To me, that's the strongest one.
If forced to choose, I would say the same thing. And I have a hunch that some people think that same thing, and they put down network effects for the number for the network of distribution centers
Sure,
that
sure.
the company has. But again, I would also say low cost production. That people when they hear low cost, they think low price.
Right.
Completely different things.
I mean, it can mean the same thing
It can.
sometimes.
Low cost means the internal cost to you, the business, to deliver that thing is lower than competitors, usually because of massive scale.
Yeah.
So Costco, Walmart, right? You could even say United Health Group and Blue Cross Blue Shield, low cost producers, different than low price. Low price is a strategy. Low cost is a moat.
Yep.
Yep.
Totally agree.
All right. So let's go ahead and do
Yeah,
some.
let's see if it agrees with us, because
Let's see
this is
what
one
the
of those
AI
where
says.
we could run this prompt like 5 times and we could get a whole bunch of different things.
I think we would. I think we would too. So let's see what it says. All right, moat analysis. Okay, moat size wide, moat direction stable, moat sources switching costs,
Okay.
and network effects.
Let's
So
see what they have to say
ChatGPT
about that.
agrees with the crowd. Amazon benefits from strong customer lock-in and self-reinforcing network effect via its Prime ecosystem and large
I
marketplace,
agree with that.
which supports high returns over cost of capital for many years. For example, the company's retail sales grew 12%, with AWS up 17%, underscoring scale advantages. And there is the source of that. Okay, so let's go one at a time. Switching costs are present and wide, and they're stable. Amazon's users face significant friction in leaving the ecosystem. Buyers are locked into Prime with the fast free shipping,
Totally
catalog
agree.
integrated services, make switching costly. Also deeply integrated. And then here is some over 250 million Prime members. Where's that source from? Okay, I don't
AI
trust that
invest.
source. Amazon, so revenue is growth. And then a quote: create high switching costs and reinvesting in
I
moat
mean,
status.
the big thing for me is very simply that if you ever try and get something delivered not on Amazon, you'll experience that difference.
Yep. Intangible assets are present, wide, and they're stable. So the company's brand, net marketplace, and logistics, software are a considered advantage. Network effects. So Amazon's marketplace attracts buyers, buyers attract sellers, sellers attract buyers. Prime membership feeds into advertising. The network effect is broad and multinational.
Agreed.
Low cost production is present. Oh, it says narrow.
I don't agree with that.
Yeah. Amazon scale and logistics, fulfillment, purchasing, and cloud give it cost advantages, but competition from Walmart and Microsoft/Google and rising fulfillment could impose pressure, limiting the moat's durability. Thus, cost advantages exist, but appears less sustainable from 10 plus years without innovation. Speaking of that, have you ever heard of this company? Have you ever heard of Zipline?
No.
This is drone delivery technology that just launched in Dallas, Texas, in the
Uh-huh.
US. This could be a threat, a disruptive threat to Amazon.
Well, okay, so here's the thing. I believe that, but I also remember watching a 60 minutes video on how Amazon was testing this out. It was 15 years ago.
Yep.
So if Amazon has the technology and hasn't done this at scale yet, I just don't think they're going to be beat. Either they're just waiting and they've got a better way of doing it, or somehow it didn't work.
All I'm saying is that technology could potentially disrupt their distribution
Sure,
advantage.
sure, it could.
It wouldn't negotiate the other advantages, but it could disrupt that. And then finally, counter positioning. It's actually giving the company credit for counter positioning because of their cloud retail. So I think this is versus retail players like Walmart. Although I would say that I wouldn't give them credit for that.
I mean, if this was 10 years ago, I'd give them credit for
Yeah.
that.
Either way, does Amazon have a moat?
No doubt.
Yes, an extremely wide moat as of right now. Okay, next question. Long-term potential. Why should we believe as shareholders that Amazon can continue to grow over time? There are two ways that companies grow: new customers and getting existing customers to spend more. Now, there are subcategories for how do you get new customers? Well, new distribution, new sales and marketing spending. You go into new markets, you make acquisitions. Amazon's done all of those. How do you get existing customers to spend more? You raise prices, you do new products and services, and you focus on customer retention. Amazon's done all of those.
Yep.
Now, in Stock Simplifier, what we teach you to do is to go to Amazon's page in Fiscal. And if we look at the growth rate right here, we can see that over the next 2 years, analysts believe that revenue is going to grow at a 10% compound annual growth rate, and earnings per share over the long term, so 5 years plus, is going to grow at a 17% compound annual growth rate. And if you have the premium plan, like we do, you can actually click the estimates button and you can actually see what the analyst estimates are for revenue over a multi-year period and stuff like that. But let's put a poll up.
Yep.
What do you guys think? Does Amazon, the company, have long-term growth potential. No, it's meager. Yellow, kind of mid tier, or yes, very high growth potential.
And when this pops up, Brian, this out of all of the prompts that we've created here, this is my favorite one. And here's the reason why. And y'all will see this when we run it. I love, like reasonable, we'll call them smart cuts, not shortcuts, but smart cuts. If you can identify the 2 or 3 metrics that are really going to drive the growth narrative for a company, someone mentioned Amazon's reporting earnings on the 30th of October. You all of a sudden have a place to go look as soon as they report. And that is incredibly valuable.
Well, this is the story that you get to tell yourself. So
Right.
when Amazon stocks drops, this is the story of why you should still have conviction.
And I'll say
Essentially.
these folks think it does. 77% said yes, it does have growth potential. 22% said kind of. We only had one person out of the hundreds and hundreds here who said no.
All right. So I so here's the long-term potential prompt. I put it in there. What company would you like me to analyze? Amazon, AMZN. And we'll see what ChatGPT says. So using its 10K. Okay. New customer acquisition. So marketing and sales investment. This is a moderate area of growth. The company states that sales and marketing costs did not significantly change. So it's not investing a ton in that. Okay. New distribution channels, strong. Sales growth was driven by increasing using sales, third-party sellers, advertising, and subscription services.
I think what that means just is that it's what we saw when we broke it down by steps. Yeah. It's like advertising and AWS. That's new distribution, quote unquote.
Yes, that's what it's giving as a new distribution channel. Yep. Geographic expansion strong. Net sales increased 12% internationally and 10% for the 9-month. High confidence. Acquisitions weak. I found no major recent acquisitions disclosure that clearly signal large bolt-on growth drivers, although it has low confidence. I would say that that's accurate.
Yeah. I mean, they've made important ones, but that's more about cutting costs in their warehouses than it is about sales growth.
Yeah. I mean, Amazon is like what, like a $2 trillion company or something? 2.4. So even if it bought a $200 billion company, that would be 10% of the company's size. Yeah. All right. Next, existing customer expansion, moderate pricing power, operating margin improved, indicating some pricing or cost leverage. New products or services, strong. The company indicated that AWS grew 19%, pointing to new cloud services. I'd also add in there the advertising business is at significant scale. Customer retention is moderate. Unearned revenue was 20 billion. So biggest growth drivers are geographic and market expansion and new product and services. Secondary are distribution channels, pricing, and customer retention. Untapped are acquisitions. I'm going to say that the company doesn't really have acquisitions as an outlet. And then here's a nice color-coded map for you at the bottom.
Brian, real quick, do you still have that Fiscal AI page for Amazon pulled up where we had their KPIs?
No, but I can't get it.
Okay, well, you don't even need, so
it does, yeah.
What I think is really, really great about this prompt is now, I already knew this, but if I didn't, when I go and look at Amazon, I'm obviously, because this is what I do for my job, I'm going to read the whole report, but the first place that I'm going to go is the new products and services. So I'm going to look at third-party seller services, AWS, and advertising. And I'm going to say, how much did those 3 things grow? Because that will probably account for a huge part of how the stock reacts. And then the other part, if you just scroll down where they have international, I'm just going to look at how much did their international grow. So I know that's in segments and KPIs. Yeah. So there you go. International revenue. And I'll just look at that. And so the great thing about this prompt is that now I've got 4 tailored metrics that I'm going to look for this investment.
Yeah. So the answer there is international is growing, but
it's not knocking the ball out of the park.
It's not a major driver.
Right.
Right. I mean, it's essentially grown 40% in the last 5 years total. So what's that? 8% per year. It's not nothing.
But I think a lot of people think that that operating income is really important too, because it's profitable now and you see that it's increasing somewhat rapidly. Like I think there's a lot of hope that it can become a driver.
Yeah.
Whether it does, I don't know.
Yeah. Yeah, for sure. Okay. Okay. As a reminder, if you want everything that we're using, $99 for Stock Simplifier if you use the link that's in the chat.
And
Okay,
I'm
up
putting it back
next.
in the chat right now, Brian. Real quick, we had one question about it.
Sure.
Is that just for 1 year?
Yeah. No, it's a one time. It's one time. There's
And
no recurring payment at all. It's a one-time fee.
if we discover better ways to write the prompts, will people have access to that?
Yes, as we create new prompts and new methods, we're going to update them in Stock Simplifier, and you'll get access to any additional things that we create, any additional prompts. You'll get those included. So it's a one-time payment that gets you that. Yeah.
Okay, cool.
Just to make sure that that was clear. Okay, next, key metrics. Key metrics for a phase 4 company. So again, if we use the tool, the checklist tool, these metrics do change depending on which phase the company is in, hence why we did the phase first. Here are the key metrics to look at for a phase 4 company. So Amazon we identified as phase 4. So revenue growth on a 3-year basis, operating margin, free cash flow margin, earnings versus estimates, and ROIC. I wonder if this, well, we'll see. How good of a job is ChatGPT going to do with looking up all of those metrics in there? So it should ask us what company and what phase is it in. Yep. Okay. So Amazon,
In phase
AMZN,
4?
phase 4.
Okay.
This, we are asking ChatGPT to do detailed calculations into the metrics and the margins and stuff like that. So if you've ever used AI, you know that it doesn't always do the best. It's simple math, but we'll see. We'll see what it says. And I do have Fiscal AI here to just back it up.
Yeah,
All
so
right.
you can, I mean, you can see right here where it calculated it, but its color coding doesn't make sense. So if
No.
the threshold was 20% plus and it's
Yep.
telling us that it's growing at 11%, well, that should be yellow, for
Yep.
instance.
Yep. And if we go here, so if we go back to AWS. So over the last 3 years, revenue has grown 11.3%. So that is correct. But our target is 20%. So this should be a yellow from a growth rate. Okay, operating margin, this is saying 10.8%, and that's green because it's a positive figure and it's rising. Free cash flow margin was 36 billion on that much revenue, so 6%. So it is a positive number. I have a feeling this number is
all over the place.
Yeah, because of the huge CapEx spending. Earnings versus estimates, 4 of the 4 recent quarters include beats on guidance, and it's using Amazon as a result there. So that's really good. And then return on invested capital, it's saying 13.3%, and that's above 5% and rising. I wonder if that's accurate. So this is saying 6, but that's on a 5-year basis. So if I go financials, and then I go down, and this should be under ratios. And then so many ratios, so many numbers. If we go to, I think it's capital efficiency, return on invested capital, this is saying, yeah, you can see that's all over the map.
Yeah.
Return on invested capital, 12.7%.
So it's pretty close.
Yeah, it is. It is pretty close. So
real quick question. That ROIC target of above 5%.
Yep.
Tarun is just wondering, how do we pick that? And isn't that highly industry dependent?
Yes, it's definitely industry dependent for Stock Simplifier. We've simplified things as much as possible. And note that 5% is not like a really strong number in absolute terms. Keep in mind that this is a phase 4 company, not a phase 5. It's a phase 4. So its profitability is improving. So we wanted this number just to be a positive figure and trending upward. That is more important to us than the absolute number is at this phase. If it was a phase 5 company, we would want this number to be in the double digits.
Yeah. Yep.
All right. But overall, I would say that this is a yellow, this is a green, this is a yellow, this is a green, and this is a green. So 3 of the 5, it's done pretty good.
Not bad.
On a key metric perspective, I would say green/yellowish, depending on the exact metric.
Agreed.
Let's pause for questions. Do we have any questions we have?
Um, Sarvan was wondering, can we use stock simplifier for small or medium size, like small cap, medium size, medium, mid cap?
Yes. Stock Simplifier is great for overall views. There are a couple of industries where it does not perform that well. Any really cyclical industries, so oil companies, biotech companies, like companies that lose tons of money on purpose, it doesn't work well. Any companies with really heavy cyclical demand, it doesn't work as well on. Banks and insurance companies, like financial institutions, it doesn't work as well on. So we like to say it gets you, it covers 80% of the market, not 100%, but 80%. But even the basic things that we're talking about, which is like, what does the business do? Does it have a moat? Is there long-term potential? Those things are apply no matter size, scope, or anything.
Um, follow up. You can determine the stages using a prompt, and one thing that's really important is that a small cap stock can be in stage 5. They might just be playing in a smaller market,
Yep.
and so they could be fully mature at that size.
You can have $1 million in revenue and be in stage 6. Like the size of the company is irrelevant to the phase that you're in.
Last question: does this work for REITs?
Not as well. They're in a
I agree.
specialty. They're in a specialty financial category. So again, the business works, the moat works, the growth sources work, the key metrics not as well, the risks work, and the valuation not as well. So on 80% of the companies, it works fine. On that remaining 20%, it gets you about 80% of the way there.
Yep. Just one more thing. Dora's pointing out that it's basically two businesses, retail and AWS. We're bundling them together. Again, stock simplifier. We're trying to simplify. You're not wrong, though. Like, if you want to take the time to break those apart, that's worth doing. And Jason's question is, hey, these metrics are stellar and the stock's only up 1% year to date. What gives? What do you think?
Well, let's take a look. When in doubt, you know what I always do?
Zoom out?
Zoom out. When in doubt, zoom out.
Right there. Yep, that's the
There
right
we
one.
go. Okay.
So
So this
make
is,
it a percentage.
yeah, so percent change. Okay. So this is year to date, 1%, 1 year, 18%, 3 years, 5 years. Wow, it's already up 40% of the last 5 years.
Well, and part of that's because where that 5 years starts.
Yeah. So the long term looks pretty good.
Yeah, well, go to where we bought it in 2010, 2011. So, I mean, why is it up so much or so little? I mean, trying to explain why a stock goes up or down over less than 3 years, it has more to do with emotions than anything else,
Yeah.
and valuation,
And
which is
when
our
did you
last.
buy and when did you buy it? So
Yep.
let's do from yeah. And why hasn't it performed better? Um, Financials that look great and underperforming stock is a magical combination if you want to
Yeah,
buy it.
you should love to see that as an investor.
Yeah. If you're a seller, that should make you mad. If you're a
Yeah.
buyer, that should make you very happy. In
Yep.
fact, that's
So
best case scenario if you're a buyer.
I'll also just throw out there, like all big companies, it's spending hand over fist on AI.
Sure. Yep. And COVID was a whipsaw. Like it pulled forward so much demand. The company way overspent, and then it had a Bezos headed for the exits, and I mean, all kinds of reasons why it's kind of underperformed over the last year or 3 years. But over the long term, there's more to like, and we're gonna get to valuation quite
Yep.
soon. All right. So next, risks. When we analyzed risks, and again, stock simplifier, we said that all risks boil down to one risk: execution risk. Can the company do everything that we just looked up promising it? Can the company execute on the growth that we think that it has? What are the chances of that happening? So there are 4 broad risks that prevent a company from executing. There's concentration risk, there's disruption risk, there's outside forces risk, and there's competition risk. So all of those combined together to come up with one mega risk. What do you think are the chances that this company won't be able to execute on its growth plan? So we do have a prompt for this, the key metrics prompts. Let's put that in there and let's see what ChatGPT says about Amazon's execution risk. Okay. Overall risk, it says, is medium. Its primary risk factors are outside forces and competition.
I'm
And
kind of
it's,
curious to see what outside forces it's calling on. Maybe just the economy in general.
yep. And it might be, yeah, well, let's see. So key mitigations are, of course, it's moat. So it's scale, it's diversified business, and continued innovation and automation. Okay. So concentration risk. This is not a problem, according to ChatGPT. No single customer exceeds 10% of sales, and it's hugely diversified. I would 100% agree with that. Disruption risk. It says not a problem. Amazon is the primary disruptor in e-commerce and cloud computing, and it has lots of tools, risk factors in emerging AI competition, but no specific displacement
Real
threat.
Real quick on that, Brian, because we got a really humorous. Someone said you were talking about the drone company perhaps being disruptive,
Yep.
and there was someone who worked with them in Texas and Amazon, and they said they weren't able to make it work because people were shooting them down over ranches. There you go.
Good to know. It's almost like people aren't used to that technology as of yet. Okay, next, outside forces, yellow, and this is a trending higher. So antitrust and regulatory scrutiny
Makes
are
total sense.
outside forces. Macro exposure to inflation, labor, energy prices, and exchange rates. And then AWS sensitivity to IT enterprise spending and interest rates could pressure growth if economic conditions tighten, and the trend is rising as regulatory environment intensifies. So, okay, it's saying that's a risk.
Yep.
Competition risk. This is a trend that's going higher. So, big pressure from Walmart, Temu, and Shein. AWS has competition from Azure and cloud, and I think that those are growing faster. Yeah, look at
Yeah,
that.
they are.
Azure is growing faster than AWS. So
They're
Azure,
smaller than AWS, so it's a smaller base,
but
but they are growing faster.
their scale is meaningful. It's
Yes,
not
it
that
is.
much smaller.
Yeah.
Advertising revenue faces competition from Google, Meta, and TikTok. I would actually flip that around and say that Google, Meta, and TikTok have advertising
Yeah.
revenue challenges from Amazon. And then margins improving is a problem. So no concentration, no disruption, moderate outside forces, moderate competition. Brian, let's throw a poll up. What do people
Yeah.
think? What do you guys think of Amazon's execution risk? Would you rank this as a high risk situation, a medium risk situation, or a low risk situation?
It is interesting to see the regulatory come up with what the last 48 hours have kind of brought to light. On the one hand, you could look at that AWS outage as evidence of just how important AWS is. On the other hand, you could say, man, if I was a legislator, I would be saying, we as a country have a lot of concentration risk that we need to mitigate.
And wasn't Amazon stock up yesterday?
It was.
Yeah.
It was.
Yeah.
Now, I will say too, the other thing a couple people talked about when we first started this is Amazon just announced today that they're looking to replace 600,000 employees over the next couple of years in their warehouses with robots. And if memory serves, that's equivalent to between a third and 40% of their employees. So that's
I think they have
that's
they have
that's not
1.5 million
insignificant.
employees, something like that.
Yeah. All right. So
Actually,
I'm ending
I
the
think they
poll.
have that here. Doesn't they have?
Uh,
Don't they have that here somewhere?
66% of people gave it a yellow for
Okay.
risky,
Okay.
and 33% said green. We had almost no red, which is
Okay.
that's very interesting.
I would go if there was an option for greenish yellow, I would have chosen that. If forced to choose, I would say green. I would say it's a low risk bet personally. How about you?
I would go greenish yellow. There's a reason it's one of my biggest positions.
Yep. Friendly reminder: if you want stock simplifier, it's 99 bucks with the link in the chat. Okay. Next is valuation. So we do have a prompt for valuation. However, all the valuation prompt does is it tells you which metrics to look at, and we kind of already know that. So remember, the first thing that we did was which phase is Amazon in? We said phase 4, operating leverage phase. So because we're in phase 4, the metrics to look at are forward price to earnings and forward price to free cash flow in that order. So to do that, that's where Fiscal is the best resource. So financials, I'm going to go down to ratios. I'm going to go to not trailing valuation. We're going to look at forward valuation. I have to X out a whole bunch of these. Give me a second.
Not a problem. I know you get to be kind of proficient at handling all the different boxes that pop up there.
All right, so forward valuation. So we want forward price to earnings, and we want forward price to free cash flow. All right, so that's
one thing I noticed too is you're only looking at the last. For some reason, it's stuck on the last 5 years.
here.
Yeah, up top.
It's actually got all of them, but
Well, once you change that, it'll pop up.
oh yeah, you're right.
Because sometimes it does that.
If I X that out. Okay, so here's all time, or at least 20 years. So let's get that out to the last 4. All right, we have this really ugly time here during COVID. You can see how like disruptive that is to like the valuation pattern. So unfortunately, we have to exclude this period here, which Amazon was losing money basically there. So we have to bring this slider over to the period that does not include that. So if we exclude that, we'll take them one at a time. So let's look at price to earnings first. Here's price to earnings.
So 32 times
okay?
forward earnings.
Can you see that okay?
Yep, yep.
All right. So it's currently trading at 32 times forward earnings. And if we graph that out with that toggle and we do medium, high, and low, we see that the low for this period was 26 times earnings, and the high was obviously many times earnings. And if we kind of even exclude that, I'm gonna swing this to 2024, just because that's really normalized, if you will. So this is kind of the last year. So on a price to earnings, a forward basis, 32 times. It was as low as 26 and as high as 36. Okay.
Now, one thing I would just point out real quick, Brian, especially when we do the free cash flow.
Yep.
Because this is the median and not the mean, you can pull it back to include those wonky areas because it won't throw it off the same way that it would if it was a mean.
So if you were doing this, you'd look at it like this?
Yeah, I might even pull it back further and include those weird areas because, again, it's just the median. So the minimum, yeah, that gets crazy. The maximum gets crazy, but the median still at 41 seems somewhat reasonable.
This seems like a decent look.
Yeah.
Right. So, okay. So it says the average is 35 over the last 3 years, currently 32. Now that's forward price to earnings. So let's do that same analysis for price to free cash flow. Price to free cash flow. Okay. So we push this little graph line button here, mean, minimum, max. And we see that it was 108 times free cash flow, as low as 19 times free cash flow. So this to me really reflects we got to spend like crazy on these data centers, which is really compressing free cash flow.
And I know that we normally we stop at that, but just to show you how we can take it to the next level, I think looking at operating cash flow is more instructive because I don't think, and Brian, tell me what you think, but I don't believe they're going to be spending $100 billion per year forever on AI. Maybe I'm wrong, but I think that they're not going to be doing that.
Well, I think that price to operating cash flow has historically been a better measure of value. So let's get on the same stage about what this means. Operating cash flow is how much cash the business throws off, but does not subtract capital expenditures. So it does not include building out fulfillment centers, does not include building out on AI and data centers.
Blackwell chips.
Right. It excludes that. Free cash flow includes that. Operating cash flow excludes that.
Yeah.
So this is just how much cash flow is the business producing. And if you use this metric, it can help to normalize heavy spenders like Amazon. So I think we should be able to go.
I think you can really pull that one back.
Yeah. So if we look at that one, what's this? I'm going to do 10 years? Or
sure.
Yeah, all right. That's not terrible. So medium, mid, and high. So Amazon historically traded at 35 times operating cash flow at the peak and 9 times operating cash flow at the low. Currently 15 times operating cash flow with a median of 18 times operating cash flow. So, all right, we just threw a bunch of metrics at you. What do you think of Amazon's valuation today? Green, it's undervalued. Yellow, it's fairly valued. Red, it's overvalued.
I know what my answer would be.
Yep.
Look at that. And we're coming up on 30 seconds, and 2/3 of people have voted. So I'm gonna end the poll and share, because basically 2/3 of people said that it is yellow, fairly valued,
Yep.
and 1/3 said it is green, undervalued. Any thoughts on that, Brian?
So if I was forced to choose, I would also say yellow, and I
Mm-hmm.
would say yellow with a tinge of green.
Mm-hmm.
Personally,
Mm-hmm.
I would have no problem buying this stock at the valuation today,
Mm-hmm.
given that I personally think that the execution risk is fairly low. But
Yeah.
I don't think this is like no brainer, unbelievably undervalued territory.
Right. I was adding to it aggressively when it was in the 180s and 170s, and it's up in, I believe, like the 220s now. So to me, it's much more yellow. But it's also one of my largest positions, because
Yep.
I like being able to look down and say I don't think that there's as much downside risk.
All right, last one. Are you interested in this stock? What do you think of Amazon today, given everything that we just covered over the last hour? Do you think this is a buy? Do you think this is a hold? Do you think this is a sell? Do
I
you have
am
that?
just
You have
looking
that poll?
for an "Are you interested?" question. I think we might not have gotten that one.
Oh,
Let's see.
okay,
Here, I've got it. There we go.
great.
So for "Are you interested?", let's say red is buy, yellow is hold, red is sell, yellow is hold, green is buy. I like Bruce. I think it will be bigger in 10 years.
Yeah.
And Richard asks, what metric do we use for phase 4? There's a couple of different metrics we use, but if you want a true kind of shortcut, is look at operating profits. That's the biggest one.
So here's the general thing that we go with, again, stock simplifier.
Mm-hmm.
When we made stock simplifier, we forced ourselves to simplify everything. We think it's a great first pass. We really think it's a fantastic first pass. There's nuance, right? So Amazon has historically been extremely hard to value, extremely hard to value. So for Amazon, price to operating cash flow is probably the best metric to use.
Yeah.
Yeah,
So we've got basically a 50-50 split. 53% say buy, 46% say hold.
awesome, awesome. And again, I own this stock. Stoffel owns this stock. It's
Yep.
done fabulously well for me over the long term. It's been disappointing over the last 3 years, five
To me,
years,
that's
something like
fine.
that. Yeah, yeah, exactly. It's been an underperformer more recently, but that's just how stocks go. So, we have any questions, Brian? That we have a
Yeah.
couple minutes here, so let's knock out some questions.
Let's see. One question: what is your take on Amazon versus Mercado Libre in Latin America?
Um, well, Mercado Libre is my number one holding, so I've seen this story before of
Yeah.
fill in the blank competitor tries to enter Mercado Libre's territory and take them on. Amazon is a major competitor. They should not be trifled with, but no reason you can't own both.
Yeah, and I'll also just say this goes back to what I believe the key mode is, that logistics, their fulfillment network. That takes a long time and a lot of money to replicate, and Mercado Libre has already started doing that in Latin America. They're ahead of Amazon in that respect. So
By the way, would anybody like us to do this analysis on Mercado Libre? We'd be
great.
happy to
Yep.
in a future episode.
Yep. So how about this? What are we? Buy, sell, or hold? What are you at?
So I've been holding it for 15 years. I am not in a rush to add to my position. If I did not own Amazon, I would happily buy it today, fresh. But since it's already a meaningful holding for me, I am personally not going to buy it. But you mentioned, Brian, you were adding to it fairly recently, right?
When it was in the 180s, I was.
Yeah. So the
What
current
I would say,
price, current
say it
price
again?
is 220. So
Mhm.
would you consider this stock a strong buy in the 180s?
No, well, in the 180s, yes. So what I would say, so here's the way that I think about it. Right now, it switches every day between my second and third largest position. If I'm not selling it, then one way to look at it is to say it's a buy. Because if you really want to be a great investor, every morning you wake up, you should be like, am I comfortable with this being 10% of my portfolio? My answer is yes, so it's a buy. At the same time, I'm not adding to it because it's already 10% of my portfolio. So you could say, oh, well, then it's a hold.
Yep.
You know, six of one, a half dozen of another.
Yeah. How about this? Do you think this company's going to beat the market over the next 5 years?
I think it's going to beat over the next 10 years. I'll
Okay.
say that.
I think it's going to beat it over the next five.
Mm-hmm.
Yeah. Great.
Let's see. What types of companies or sectors would you not use Stock Simplifier for? You mentioned a couple. Are there any others?
Insurance, biotech, um, highly cyclical companies such as oil commodity producers. So oil companies, natural gas companies, gold producers, any company that's heavily sensitive to interest rates, such as banks or companies that are financing it. Again, I wouldn't use Stock Simplifier to do all the analysis. Stock Simplifier, the one of the key features of it is this part here, which is the key metrics. Again, we asked ourselves, how can we distill the key metrics that to analyze a business depending on the phase that it's in, and those metrics change depending on which phase you choose for the company's growth cycle, right? So that part does not work well when revenue is not predictable or revenue is highly sensitive to some external factor.
Question here, interesting one. How much of an impact would the Bezos, when him and his wife got divorced and she's been selling stock over the past few years, do you think that that plays a role?
I don't. I think Amazon. I think she was worth 38 billion,
Mm-hmm.
something like that, and she's given like all that away. Amazon, the company, is worth 2.4 trillion. So even if she dumped all of the remaining holdings tomorrow in one big transaction, that would probably impact the stock price. But they're typically doing them continually in smaller chunks. So I think they got divorced in like 2010,
No, no, no. It was more recent than that.
15.
I think it was even more recent than that. But I don't think it does either. I highly doubt that they're doing this. She's doing this all at once.
Um,
Um, you
Jeff
looking it
Bezos
up?
got divorced 2019. You are
There
right.
you go.
You're right.
Kivank has asked, can we
So
reach
maybe that is the reason it has underperformed over the last 6 years.
can we reach an average price by using PE or price to free cash flow? I mean,
What do you mean?
so one thing you can do if the what you pulled up like the median PE
Yep.
of I think it was like 35 is the
Yep.
median. You could take whatever the E is, the earnings per share, multiply that times 35 and call that the average price, but I think that's overly simplified. I would resist the temptation to come up with a very precise answer.
Yeah. Um. Yeah. If you could do worse than saying what's operating cash flow, multiply that by 18, and say that's what the price should be.
Yeah. Sam says there's a lot of tech stocks that are doing well or have done well recently, but they seem to be negative cash flow, negative net profits. But a lot of people say they're strong buys. He's not really sure what to look for when evaluating exactly. I would say that looking at the companies, their moat is probably the most important thing that you can look at. So that moat one.
Yep. The moat is sure. Um. If you can see this,
Yep, you can
I'm
see
a
it well.
big fan of the Gartner hype cycle framework. God, I can't get a good picture. There it is.
That's good.
I'm a big fan of the Gartner hype cycle framework. So technology trigger. So AI. We had AI. This is 2022. When do expectations peak? They haven't peaked yet. That's for sure. And then when's the fall? And then where's the trial of disillusionment? And then the slip of enlightenment and the plateau of productivity. This is a fairly reliable indicator
So
for that.
just to give us an idea, what industries right now are nearing, like they're going up that first slope? I would say
AI.
quantum computing,
Yep.
um, a
What else
lot
is
of
super?
AI focused stocks.
What are the most like highly hyped stocks out there? I would say AI and quantum are the only two that I can think of off the top of my head.
I think
Um,
rare earth
can
metals
you see my
are,
arm?
yep.
Yeah. Okay. I like to do this analysis. So if you can imagine that this is the market, okay. Out here is the riskiest stocks possible.
Mhm.
So profitless companies. Over here is utilities. When the
Mhm.
market goes up, utilities barely move. The riskiest stocks move like crazy. When the market goes down, utilities, consumer defensive barely move. These companies get crushed. So when you're in an upswing, an exciting upswing, the thing that you want to own is the riskiest,
Yeah.
most speculative companies out there. Those do the best. It's just that when this happens, look out below. And if you need just pull up any of the SPACs from 2020 or 2021 and then look how they did in 2022.
Some people pointed out too, energy companies. There's some that
Yeah.
are in there at the end, like Oklo.
I'd say gold companies right now,
Mhm.
right? So I love the visual. This is the S&P 500, right? S&P 500, defensive companies, Pepsi, Coca-Cola. This is quantum computing, right? Which direction do you think the market's going to go? Because that's what's going to happen.
Mhm. No, I totally agree. Yves is asking, do you have a how do you project your CAGR in a base case for Amazon? One thing I'll just say to Yves is I resist doing that in my own portfolio. However, when I do a reverse discounted cash flow, I'll give Amazon a 10% discount rate, which just means that I'm expecting it to at least get 10% per year return, which would match the market's long-term average.
There you go. Well, thank you guys for joining us. As a reminder, if you do buy Stock Simplifier and you have a question about anything that we covered, we have a full course that goes into the specific details on that. You do get the tool, you get all of the prompts and any prompts that we make in the future. We do have a 30-day money back guarantee on it. So as long as you're watching during this stream, you can get it for 99 bucks. And as another reminder, this was stock 2 in the Mag 7 series. I will email everybody that is on this stream a link to this replay, as well as the replay from Google that we did. And we hope you join us tomorrow.
Tomorrow.
Tomorrow, October 22nd at noon, where we're going to be doing the exact same process on Apple, which I think just hit an all-time high yesterday.
And let me just say one thing, because Steve gave us a great testimony here. Steve says, thank you. If you don't already own the tools, as someone who owns them and uses them, it's a real deal and it's easy. So thanks for that, Steve.
You rock, Steve. Well, thanks so much, everybody. I will email you this link in a few hours, and we hope you join us tomorrow. We'll send you some emails tomorrow to join us again. So until next time, Brian's out.